Hello, this is Joe Pryor, the virtual real estate team in Oklahoma. I'm back to doing my Monday videos. I've been gone, pretty extended vacation. Got to do that every once in a while, but kind of want to talk today a little bit about current situation. Today is what, the 15th? Tax day. But there's a lot of turmoil going on right now that's just really hurting the markets. I'm sure if you watch television or, get on the internet or whatever, you knew that Iran fired about 300 missiles to Israel. And unfortunately, most all of those were intercepted by a coalition, and that's fantastic news. But what's happened is now the fear is that the Israeli government, which is pretty aggressive, as you know, in terms of trying to defeat Hamas, are now going to look for retaliation back to Iran. And a lot of shipping goes through the Straits of Hormuz, through that particular area. And this kind of localized war that's been going on in Gaza has the potential of going even greater. And so what's happened is that rates went up last week, but I checked rates today and they went up another quarter of a point, and I think they will go up again about another quarter point. I don't think we've seen the last of the interest rate increases. And normally this doesn't happen. Normally what happens is a flight to quality. When tensions around the world happen like this, the world wants to invest in the United States, especially in the safest investment that's out there, which is United States Treasuries. But the reverse has happened. So now what the U.S. has got to do, or is doing right now, is raising the interest that you're going to be getting on buying, for instance, 10-year treasuries, which very much affects the mortgage rates. And so normally it would be the other direction, but the U.S. government has to finance the debt, and they do this with treasuries. And if not enough people buy them, then what they have to do is, say, make them more attractive. Now, at the same time, the stock market has sold off big today. And it sold off on Friday, because I'm in the stock market too, besides investing in real estate. Now, what does this all mean? It just basically means that you would think the market would slow down because these rates have been high, not historically high. I can remember much higher rates. But for most of you out there that are younger, these are very high rates and they're going up. But talking to the builders, hey, why don't you give us some deals right now? Well, everything is selling. I looked on the MLS today, 42 days on the market for everything in the MLS. Now that's 10 days more than a year ago at this time, 32 days. But inventory has expanded pretty strongly in the last year. That is one thing that's really changed. And so, 42 days on the market is still a strong seller's market. And then we've seen this flight to new construction in terms of realtors worrying about their commissions now with the lawsuits doing that. And so the builders have no incentive at this point. And prices keep going up because owner occupants are buying regardless of these rates. They're lower in investor rates, but they're buying. And so what's happening is the fact that it's probably a good idea to get on something right now and buy it today, even with these rates if you're an investor. Refinance 2 years down the road, because even though you incorporate closing costs because the rates, the price of the house has gone up and your mortgage is a little bit more, but in 2026 or 2025, rates are going to be considerably lower. Because they will start lowering this year, probably not till the fourth quarter. So that's the general idea. Oklahoma City and Tulsa still selling like crazy, still a seller's market. No deals are coming up. And so this is something that I think if you're really an investor right now, hop on it today, lock in these prices, refinance in the next 2 years.